we have Nicole Ryan with us, who is from Freed Maxick, and is going to present to us the summary for 2019-20.
Hello, everyone. It's so nice to see everyone. It's a shame that I can't see you in person. But I guess right now it's still safer that way. Thank you for still inviting me to the meeting. It is nice to see people once in a while. A lot of people put it off this year or said, well, we'll just see you next year. So being that I haven't been to one of your meetings, it was great to be able to actually have a chance to introduce myself now that Laura is retired. But just to give you a little background, I have worked on the Village of Webster for a number of years. So you might not have seen me, but I've been involved. So just to start off, I wanted to say thank you really to the village and to the employees, Marcia, Heather. It's very hard to do a remote audit, and they made it happen. And it went probably as smooth as it could have, and we really appreciated all the effort that was put in.
Thank you, Nicole. We appreciate that.
That being said, I'll hop right to it. So we conducted our audit under generally accepted auditing standards for the year ended May 31st, 2020. We were able to issue unmodified opinions over your governmental activities, business type activities, each major fund, and the aggregate non-major fund information. So that's a positive opinion, in case you don't know. The terminology they use is a little distorted for some people, but really it means that your financial statements are not materially misstated, which is the goal. This year we did work with the village to implement GASB statement number 84 related to fiduciary activities. GASB is the standard setting board for governmental accounting. So they're the ones that basically dictate all of your accounting standards that your financial statements have to comply with for us to be considered generally accepted auditing standards. So GASB Statement 84 essentially changed the presentation of your fiduciary activity. Before, I'm sure you saw the village had a trust and agency fund, which may still be recorded internally that way, but for financial statement purposes, it was changed to what they call custodial funds, and certain activity had to be reevaluated and pulled out of that fund. So they really tried to drill down on what was really fiduciary in nature and what wasn't. So where previously you had certain payroll activity that was held in there, more of a timing difference before, say, New York State pulled out retirement payments, little things like that. Those items were reclassified and put into the actual fund. So due to the amount it was transferred for financial statement purposes, it falls under your general fund at your end. But another example, which you did have, is bid deposits. That is more fiduciary in nature because it doesn't essentially belong to the village. So that was still maintained in your statement of fiduciary net position. The big difference there is that now we're required to show inflows and outflows related to that type of activity. So those are some of the differences that came about this year. Nothing too major or overly difficult because you didn't have too much in the fiduciary activities, so pretty straightforward. Also, in May of 2020, GASB issued statement number 95. They felt for everybody during the pandemic and decided to postpone a lot of the upcoming effective dates for certain statements. So we were able to postpone the biggest one that's up and coming is related to leases. That's postponed about 18 months or so, so that'll push that off till 2023. That was really it as far as new standards, so everything else is pretty straightforward. I don't know if you have the financial statements with you, but I'm going to kind of go through little pieces of it here.
Wish we did.
Let me see. Did you want me to try to share my screen?
Jude,
Sure.
we gave those to you like 2 meetings ago. Marcia, wasn't it? We sent them a couple times. They're in your email, and then I printed them for you as well. Sorry to interrupt.
No, you're fine. Feel free to interrupt me at any time if you have any questions as well.
Oh, thank you.
I have it.
Good job, Carl.
Oh, do you want me to?
Well,
I'm sorry. Let me mute.
Perhaps because there are some members of the public that are listening in, maybe you could share the screen so they can see the numbers.
Okay, and I'm gonna make you the presenter. Hold on 1 second.
Okay, are you able to see the PDF that I have up here?
Yes.
Okay.
Oh, good.
So what I initially just went over was our opinion report, which takes place right here. It states the opinions that we gave over the village's financial statements, the emphasis of matter related to the statement number 84 that I was just discussing. Beginning on page 3, we have the statement of net position. So this is the start of what we call your government-wide financial statements. It includes the governmental and business type activities of the village. The biggest difference that you'll see here compared to internal financial reporting is this includes capital assets and long-term liabilities of the village. Your capital assets totaled approximately $5.6 million in governmental activities and $1.5 million in business type activities. Your long-term liabilities, which you see down here, totaled about $4.65 million in the governmental activities and $2.5 million in the business type activities at year end. So the largest of these liabilities was the other post-employment benefit liability, which amounted to $4.75 million for the village as a whole. This liability is calculated based on the actuarial valuation that you obtained in accordance with statement number 75. And one thing I'll caution you is because GASB requires you to include those liabilities of the potential future payments you might have to retirees related to health insurance and for subsidizing and things of that nature. They have a liability on here, but where there's a slight issue in the financial reporting, especially in New York State, is New York State doesn't allow for you to have any kind of funding mechanism. So it distorts these statements a little bit because there's no way for you to really show that you're saving any money or putting aside any. So the way I explain it usually to the boards is you want to look at this number as think of something that could potentially come down the road. We understand you can't save, so we don't put a lot behind the number as far as criticizing you, because if you look down here, it causes a deficit on these statements. So that's why when you look at your unrestricted net position, you see that there's a deficit of $2.2 million in the governmental activities and $1.6 million in the business side activities. And that's primarily due to your other post-employment benefit liability that you're required to report on here. Does anybody have any question on those?
No.
Okay.
So the net position is still
That's
positive.
similar to
Still
the
positive.
overall is, but as you see here, there's a thing called net investment and capital assets.
Yeah.
So what it does is it breaks out the investment that you've made in your capital assets up here, so you can see, have a better presentation almost of what's considered the unrestricted portion. This is essentially the income statement associated with the government-wide statements. I won't this is going to be more of what you would be interested in, and that's your balance sheet that starts on page 5. These are your fund basis financial statements, and these are reported similarly to your internal financial reporting. So this is where you're going to see your fund balances and the related activity. So I'll start with the general fund. Your total fund balance at the end of the year was $1.7 million. $484,000 of that is considered non-spendable, and that relates to the amount that's owed to the general fund from the sewer fund. They set that aside basically to show that because you've already loaned that to the sewer fund, you don't have it available to use. That leaves $371,000 in restricted fund balance, which is set aside for your capital reserve and your debt service. $25,000 in assigned fund balance for encumbrances, and that leaves $845,000 in unassigned fund balance. I'm going to just drop down to the next schedule, which is similar to your what they would call an income statement. And you can see here that your current year revenues exceeded expenditures in the general fund by about $194,000. Just some small notes. We noted that the sales tax revenues were down about $112,000 from the previous year, or 7.5%. And also gross utilities receipts were down about $35,000, or 28%, which given the pandemic isn't overly surprising, based on what we've seen. Actually, some of the sales tax numbers wound up being a lot better than we expected going into the end of the year for the villages. Really quick, I'm not going to skip there right now, but towards the back of your financial statements, there's a schedule called your budgetary comparison schedule. And what it does is it takes the general fund's revenues and expenditure information here, and it compares it to your final budgeted numbers. When looking at that schedule, your actual expenditures in the general fund remained under the total budgeted appropriations by $433,000. Are there any questions on the general fund? Okay. There's this other column here called non-major governmental funds, and that consists of your capital projects fund, which didn't have any activity in it for this year, and your Parks and Recreation Fund. The Parks and Rec Fund had $150,000 in restricted fund balance at the end of the year, and there was an increase of about $29,000 in the overall fund balance. So your revenues exceeded I don't believe you had any expenditures in there, so it primarily consisted of an increase of $29,000. For statements in accordance with GASB, your sewer fund goes through certain adjustments to be converted to a presentation that's more of a business format, similar to the government-wide financial statements that I explained earlier. So your sewer fund here presents capital assets as well as the long-term liabilities that I mentioned. So I'll go through this briefly, and then I'm going to jump over and give you what your sewer fund really ended up like if you were looking at it based on your internal financial reporting. So the sewer fund had a deficit net position of $1 million at the end of the year, with the unrestricted of $1.6 million, like I mentioned earlier. There was an operating loss of $55,000 versus an operating loss last year of $228,000. So you saw a lot of improvement there. Probably a large part of that was due to the rate adjustments that was made for the sewer fund. Also, your overall net position change down here was 93,000. And just one thing to note, because of the placement of the special assessment revenues, that's why you see the difference that's occurring there. It's just the way it gets grouped into non-operating versus operating.
So, Nicole, in other words,
Yeah.
then we should be looking at, even though it's showing an operating loss, it's showing as a loss because it does not include the special assessment, like the sewer charges that are included on the tax bills, right?
Right. In this presentation, that part is not included. But
Okay.
really briefly, I don't have it shown here. Yeah, I can't really pull it up too quickly. But I will go over some basic numbers. So if I were to pull out your capital assets and pull out your long-term liabilities here, so similar to what Marcia would print off for you from the office, your sewer fund ended with a deficit fund balance of $315,000 at the end of the year. But the revenues did exceed the expenditures by $202,000. And again, that was largely due to the rate increase when I did a comparison of current year to prior year numbers. The biggest difference that I saw on the expenditure side from current year to prior year related to certain equipment purchases that were made last year for about $112,000 that were not reported this year. So that's ultimately, we're required to report this way for GASB purposes. But internally, when you're preparing to do your upcoming budget, the other numbers that I just mentioned are what you really would want to focus on. The other, really, I just want to show you too, and this goes across the board because it pulls out those accruals and adjustments for the most part, is the cash flow of the sewer fund. So, as you can see here, when you look at your cash flow for the different categories, you basically had an overall net decrease in cash of about $12,000. And really, I would say the biggest concern for the sewer fund, which I know you're well aware of, has to do with the $484,000 that's owed to the general fund. Now,
What
I
can we
know,
do?
what can you do with that, did you say? So you have a couple options. Depending on the status of the general fund, you could do a one-time write-off where you basically do a transfer and say, you know what, we're going to start fresh and worry about maintaining the sewer fund from here on out and help it to stand on its own. Your other option is to basically create a repayment schedule from the sewer fund to the general fund. If you do that and you're going to do it over a period of a number of years, you need to make sure you calculate and include interest in that manner because of the nature of it's similar to like treating it like a loan, as if the general fund loaned the sewer that money.
But legally, we could,
Write it off.
And
Is
so that is allowed. I have seen other places do that. I've never seen anybody get a slap on the wrist for that. You do want your business type activities to be able to stand on their own. But I do think a large part of that is when the sewer fund was established or reestablished a couple of years ago, that piece of it didn't really come along with it. So
right.
I'm
Right.
sure that was a large part of it, and Marcia and I had a good conversation about that last week. And I think that, you can see here in your fund balance for the general fund, if you take this $484,000 out, essentially this down here is what you would have left. So if you did a one-time accounting entry that would transfer and it would write off that amount owed, these three numbers down here are what you would have left, the restricted, assigned, and the unassigned.
Okay.
Yeah. Yep,
Anybody have any other questions on that?
that's good to know.
No, just wanted to make sure it was legal.
Yeah. I mean, I cannot give a legal opinion, so
I know.
that's one thing I have to caution you. That's just from my experiences and what I've
Yeah.
seen in the past.
That was something that Laura had said to us previously, some
Okay.
time ago. And Don, can you weigh in on that? Is he there?
I cannot give you an opinion as to whether it's legal or not because I've never encountered it before. It's not something that happens too often. I suppose we could write to the comptroller's office, their attorneys, their legal staff, and ask for their opinion.
I like that, yeah.
I believe Marcia has already done that. So.
Yep.
There
I
you go.
talked to someone yesterday. What I learned from him was that, generally speaking, a village is, and I mean, maybe I'm the only one who doesn't know this yet, but a village is considered to be, like there's the same tax base for the general fund and the sewer fund. So in terms of, being fair to the taxpayers, that is not an issue. Per the MSC. So I don't have, he was not sure of the legality of it or the correct procedure or whatever. He wanted to consult with a few of his colleagues, but that is definitely in the works, and I think it's looking pretty
Oh, good.
solid.
Good,
Okay, thank you very much, Marcia.
good,
Yep.
Thank you.
that's good news.
Yeah.
Very good.
So if there's no other questions on the financials, I'll switch over to the report to the board.
Nice to meet you, Nicole.
It's nice to meet you too. So in this report, we have a section called Required Communications. And in this section, it basically summarizes our responsibilities to you regarding the audit. It'll go over the arrangements, the timing. It'll reiterate any adoption of new standards that came into play this year. Sort of gives you just an overview and a summary of different pieces of it.
Nicole, I just need to interrupt you for 1 second. I apologize.
Sure, no problem.
This is my first time. I think before I had made someone, just gave someone access to show their screen. I hadn't made them the host. I don't know if there's another way to do that, but I think I might need to switch back in case we get any questions, because I think you're getting them, not me now. If we get any from the audience or anything. So I was hoping I could try if there's another way to just make it a presenter but not host. And I didn't.
Sure.
Okay, let me just try. I just wanted to make sure I'm not missing anybody.
Not a problem at all.
Thank you. I'm sorry.
No, you're fine.
Okay, does it still let you share your screen? It looks like it is.
Mm-hmm,
Yeah.
mm-hmm, yep.
Okay, perfect. Sorry about that.
Not a problem. So the next part of this report sort of summarizes for you the significant accounting estimates that went into certain calculations that go into your financials. And it summarizes the policy, the basis of the estimate that was used to determine the numbers, and then the conclusion as far as the estimate. On page 5, we have what we call the summary of recorded audit adjustments. So, I caution you to not get too hung up on these. These are essentially the adjustments that were identified during the audit after we were provided the initial numbers that the adjustment was required based on the materiality. So had these adjustments not been made, they could have potentially materially misstated your financials. Now, I do honestly believe that a number of these, so like for instance, number 3, that was strictly based on the implementation. So we see that across the board. Usually there's very few municipalities that have a CPA on board that would have the significant training to be able to do some of these entries on their own. And I do believe a number of the entries, given more experience for Marcia, I don't think we're going to see them going forward. On page 6 are the recently issued accounting standards. So these are the ones that we pulled out that we thought really could more potentially have an impact on the village. I would say just read through them, see if they sound familiar to you, something that could be something we need to discuss in the future. You see the implementation dates aren't until 23 and 22, so we do have a couple years to try to work that in. 89 really only comes into play if you have construction somewhat in progress. 87 is the big one that we'll have to discuss going forward. And then 97 is the most recent, so we usually put that out there for informational purposes so that you're aware of it and see if there's any applicability. That one is pertaining to 457 deferred compensation plan. And then this is the section that more commonly is what the board wants to hear about, both the good, the bad, and the ugly. So this is our communication of material weaknesses. So there's different levels of deficiencies that you could have. You could have a material weakness, significant deficiencies, control deficiencies, or sometimes operational matters that will provide you based on what we see. So in this letter, we've provided you, I believe there were 3 material weaknesses that we thought required further attention. And the first one relates to the adjustments that I mentioned previously. Because of their material nature, we're essentially required to put this finding in there for you. So that's strictly related to that previous page of the audit adjustment. The internal control activities, Marcia and I had a great discussion on a lot of these. It sounds like a lot of processes and procedures are in the works as far as improvements in this area pertaining to journal entries, payroll, bank recs, budget to actual reporting. Really, when there's transition, we tend to find this, we tend to have this finding more often because there's that timing difference. People still learning the ropes. So it's not uncommon that controls kind of fall through the cracks a little bit more at that point. But now that things are getting up and running and smoother by the day, I'm sure. Plus, you throw a pandemic in there, and that doesn't help by any means for anybody's control processes. So we're having internal controls is quite a common finding these days because people are working everywhere trying to get by. So that
Nicole,
was the second. Yes, sir.
I have a question. Would that be something that, on a monthly basis, the reporting or the activity come across my desk where I would review that? Is that something that would take care of that particular problem or at least help? It's something that was done a number of years ago and has not been done in recent years. So is that something that would help in this area?
Yes, it is usually one of the more common ways to alleviate some of these. The main goal here is really to establish the controls to help mitigate the risk, right? You don't want to have the higher the risk of errors, misstatements, in the financial reporting, the harder it is for you to be able to do your job and really have good fiscal responsibility over the village. So that's probably the biggest concern next to the obvious legal concerns that you would have. So I think that establishing those processes, like you mentioned, and making sure that we can see that those processes are occurring. Sometimes we get a lot of, oh yeah, I do that. I glance at it every now and then. But it's really making it a more formalized process that helps to ensure that things don't fall through the cracks.
Okay.
Any other questions on those? And then the last one pertains to the sewer fund deficit, which we covered pretty significantly already, so I won't go into too much detail. I think once you make the decision as far as the amount that's owed, really the next piece is just, which you've already started the process by increasing the rates last year, is really kind of doing that long-range financial planning for the sewer fund. And I know there's been some determinations that are trying to be made there and what's going to be best for the village overall. So I think that's really the critical piece to help alleviate that issue in that fund. And finally, in this report is Exhibit B, which just consists of the representation letter that is signed between management and our firm. Are there any other questions, concerns?
Nicole, I would ask this question: if the village were interested in establishing a reserve in the sewer, so that in the future, if it were to build that reserve up so that it could meet some of the expenditures or necessary expenditures that may come up during the year, is it possible for us to establish a fund in a sewer rate that would be set aside in order to accomplish that, to build a, I don't know if you want to call it a reserve, but to build that capital that would then be able to be invested when the bill came up? In other words, right now, we're kind of flying by the seat of our pants. I mean, what we budget for is what we intend to spend. And that's what we're looking to, be able to do, is to build a reserve so that those unexpected expenses that come up can be met without going into deep debt. Because they will come up.
Understood. You're exactly right. And I think once you get back to, say, the black area, then you can really start to consider establishing equipment replacement thoughts and different things of that nature. Really, your best, really your only way to build it into your budget per se is from a contingency standpoint and trying to reduce spending compared to maybe what you had initially budgeted. I mean, it's really trying to, that's where that long range planning, and obviously right now the way things are, it makes it that much more difficult to do your long range planning because we really don't know from day to day what's going to happen. So I would say as you go into your budget time, I wouldn't, until you make the determination on what you're going to do about what's owed to the general fund and getting the fund balance in the sewer fund back to zero to start with, then allowing the rates, because you did have a net income this year, so had you been in a good place to start with, you would have ended okay. But to be able to build on that, I just caution you as far as legally reserving that money, in that fund. So it may be more of just a terminology that you're using. You can very well, as a board, establish legal reserves. You have that capability, but there are other mechanisms under the governmental accounting standards that you can use to set money aside within the sewer fund for future purchases as well. So there are other options there that we could definitely discuss going forward once you've kind of established where you're on an upward trend, which I think last year's rate increases definitely helped. We saw that in the numbers. And hopefully going forward, you'll continue to see that. Does that answer your question?
Yes, I mean, I guess I'm considering the fact that in terms of establishing a rate for the new budget,
Yeah.
and what it is we're going to be charging, and that's my question, in terms of the rate that we would charge, could that include setting reserves? Or does that have to be a rate that we look at our budget and that rate that we set, we think that's what's going to cover our budget, and if we can come in under that, then that goes into the reserve? You know what I'm saying?
Yeah.
In other words, if technically $170 would make all ends meet in terms of collection and, treatment and all of that, and all that goes into our sewer budget, and we charge $180, so that we were charging in excess of what we thought was necessary for that year, so that we were actually planning on building a reserve of some kind. Is that allowable?
I can send Marcia the criteria that you have as far as contingency for when you're building your budget.
Okay.
Because there's specific criteria that OSC puts out that says that you cannot exceed, some of them I think are like 10% of your total appropriations or certain things like that. So I don't have the specifics right in front of me, but let me get that information together for you, and I can forward something along to Marcia, so at least you have that in the back of your mind when you're going into budget season here.
Nicole, can I ask
Daryl.
a quick question? Sorry. So I just want to clarify, because I got a little confused. When I know what Daryl's trying to say, because, you want to make repairs or whatever, but,
Sure.
so that we can have some kind of, nest egg or something, but is the word reserve is that incorrect? Because reserve, you can only be used for certain things. So
Exactly.
That's
And
why
that's why I said
I
caution you.
I want to make sure that wasn't confusing. Everybody wasn't confused.
So,
Right. I caution you when you say reserve, because reserve is illegal. In New York State, if you set up an actual reserve, once the money goes into that reserve, there's only certain ways that you can get that money out, and it goes out basically 90% of the time it has to come out for that purpose. There's only a few exclusions that New York State gives you in certain cases, depending on the type of reserve you set up. So I think that's what you're referring to, Heather.
Not
So-
like a savings account. Okay.
yeah. So Daryl,
Right.
yeah. So Daryl, what Nicole's saying is, your so-called rainy day fund that's going to pay for a repair you didn't anticipate or whatever, that's generally your unallocated or unrestricted fund balance. The problem in the sewer fund is there's a negative approximately $300,000 fund balance. So you need to chip away at that, but you can't. But in New York State, you have to have zero-based budgets. You can only collect what you expect to spend in that fiscal year. You can't collect extra to just set aside. That's not fair to the taxpayers or the ratepayers. So to the extent you cut expenditures, and so what you budgeted for expenses ends up less than what your revenues are, well, now you're slowly going to erase that $300,000. But other than having a line item in the budget for contingency, which the village used to have and it still may have in the general fund, you know, you could put one of those in the sewer fund too, but there's restrictions on the amount that you can budget for contingency.
Okay, so like we put 10,000 in there, we put 8 in general, 2,000 in sewer, so there's a limit on what you can put in there. And usually we use some of it for things, but do you know what the limit is?
I have that information.
Okay.
I have that information. I can send something to you.
We've been, historically at least, we've been including a contingency amount in each fund, but it's not, I would be shocked to learn that it was anywhere near the limit.
And then,
And while we're on the subject of fund balance, I do want to reiterate that Jake has given me some historical information. I'm doing enough research to be able to determine approximately how much fund balance should have moved over to the sewer fund with the rest of the sewer numbers. And hopefully we can help the sewer fund to look a little better without hobbling the general fund. So stay tuned for an update on that.
and then Mayor Byers, I apologize. I just, I know it's not public forum, but we did have a couple questions.
Okay,
Okay, no, is it okay if I read it?
sure.
Thank you. Okay, so we had just a resident want to know, can the sewer fund have a positive fund balance?
Yes, for that purpose of future equipment, or usually you want to maintain some sort of fund balance. It's similar to having a savings account. You know, you do have expenses that come down the road, especially when you're dealing with sewer, water situations, infrastructure. Costs can add up really fast when there's emergency situations.
Right.
So usually that's where you want to eventually build on that when you're able to a little bit. That's within reason.
Okay, thank you. And then the other question I think we already answered is just how does the village establish a contingency? And I told him that we have one. We're just figuring out how much we can put in. So I think that was the only question. Thank you.
I just have one if I,
Includes mine.
Oh.
Sorry,
I just
Jason.
I have a question if I can about with the fund balances. I'm sure it's similar to the general fund where if you have an unassigned fund balance that's got to be kept within reason, that's basically you underspent or your expenses didn't or your revenues were more than your expenses, so that goes into the fund balance. They would, I'm assuming, prefer you have reserves, but again, like you said, those reserve accounts are only for specific purposes and can only be spent for what you establish a reserve for. I believe I've heard about before, but I don't know in sewer funds and these type of or budgets or operations, can you have a rate stabilization fund as a reserve? Are those type of reserves able to be set up, or is that do they have to be capital reserves and things like that?
Usually, there's a whole slew of different types of reserves that general municipal law has out there. It's which ones are applicable to villages versus other types of municipalities. So probably where you've heard of a stabilization reserve is with taxes, tax stabilization, and there's a lot of criteria that goes into those, but that would not be specific in this case.
Yeah, you'd have to look at it. It's a tax stabilization fund, and I think legally a sewer rent is not considered a tax. It's a user fee. So
Correct.
I don't believe there's such an animal as a rent stabilization fund. So I don't think you can do that one, Jake, but we could check.
Okay. Sounds good.
One other option that you can do, there's some differences between a sewer fund that's sort of more of a business type activity. Because you maintain your sewer fund internally, more like what they call a special revenue fund, there is capabilities internally to do different types of savings of fund balance, referred to as assignments or commitments. In order to do those, you would really need to, and this is under GASB, so it's not a New York State law for that, it's more for financial reporting purposes. But to have the capability to do those things, be it in the general fund or wherever else, you'd have to establish a GASB 54 policy, which Marcia and I talked about briefly. That is potentially another option. It gives you a little bit more flexibility for when you kind of want to set those aside. Now, I would caution you, though, the nature of the way the sewer fund is held in your financial statements, it would still get rolled up into the unrestricted portion of that net position on there. But for internal purposes, you may have a little bit more flexibility there without legally establishing a separate reserve.
Okay. But you'll get that kind of information to us.
Yep, I can get you both of those.
Thank you very much.
You're very welcome. Is there anything else I can help with tonight?
I don't have any further questions myself. I do, it'll be passed on to you in the near future.
Sounds like a plan.
Thank you.
Thank you, thank you.
You're very welcome. I hope you all have a good evening. It was nice meeting everybody. Marcia,
You
it's
as
good
well.
to see you.
Thanks, Nicole.
If anything does come up after the fact, please feel free to reach out to me.
Thank you very much.
Thank
Thank
you.
you.
Thank you.